Hello out there. Good morning, traders. It's January 16th, 2024. Welcome to the Daily Market Insight for the ES. As usual, we'll go over our recap from our previous DMI, and then we'll update our levels and plan for the current session today. So taking a look at what was going on the 12th, we had mentioned that there was really a lot of congestion in the ES market and that the overall outlook really wasn't all that clear. We did have two lines in the sand, one up above, one down below, one being bearish, one being bullish. And we were really just paying attention to the market in terms of how it reacted around these lines in the sand. The main general idea was if we got up above the bullishness or the bearishness, we wanted to see a bullish move. If we got down below that bullish line in the sand, we wanted to see a bearish move. And if neither of those materialized, it was going to be more of the same within this particular zone. And that's exactly what we ended up seeing. It was basically the lines in the sand holding in the overall rotational idea, maintaining that picture for the entire session. So taking a look at how this thing kind of panned out, we did get what looked like a break to the upside here. And once it came back in, there was really just no chance to get long. So this thing literally fails right back into the line in the sand area, holding inside of this line in the sand, and gave us a perfect opportunity for a pullback short to continue right down. And that really was the main trade of the session. It was the most clear, the most obvious. A false breakout to the upside comes right back into our line in the sand and holds inside of our rotational idea. And that's really the defining trade of the session right here. After that, it becomes, all right, well, as the session continues, we come down into a destination area, starts to rally again. Possible longs from in this section here, right back up to that line in the sand. And then, of course, the same kind of idea with the line in the sand holding and continuing through even the holiday yesterday. So this overall rotational context has been pretty strong for us for, the last couple of days. And that was the DMI for those days. It was really, spot on in terms of nailing this context and understanding this particular narrative. So now for today, we're looking at a very neutral ES. There's a couple of timeframes that are bearish, timeframes that are bullish, and we're kind of stuck in between. Now, the quick version of what's going on today is that this is the main line in the sand for the session overall for me, with scenario 1 being kind of where we currently are, heading to the upside, and scenario 2 being a move to the downside. And that's the general layout of the scenario for today. But to give you a little bit more insight into what's going on around this line in the sand, essentially, like I said, we have timeframes that are bearish, timeframes that are bullish, and they are conflicting with one another. So we're in a very dissonant location on the ES. The more short-term timeframes are bullish up into these areas here. And those would be kind of the end of the line for scenario 1, looking for those areas as destinations or targets. From there, once we get up into these zones here, that's where things get a little more interesting for the bears. So kind of as the bulls are heading to destination or target areas, the bears also have some areas that are strong for them on different time frames. That's one of the main reasons why everything you see here across the board is fairly neutral. Not because there isn't, some back and forth in terms of bears and bulls. It's really because they're kind of weighing each other out, and where we are currently sitting in price, the bear areas are destinations for the bulls. So that's kind of a key factor in today's context and understanding the narrative of what's going on for today. So just to reiterate the general idea of what we're looking at for today's session, this is our main line in the sand area right here. Scenario 1 is that we hold up above it, heading into these neutral destination areas. Scenario 2 is that we break down below it and possible lower destination areas on the table for that. Now, with scenario 1, once we get up into this zone, this is an area where we have to monitor for the bears. It's not colored as a bearish line in the sand right now because there hasn't been a particular key rejection from that area currently. In other words, the recency in what we're seeing in the current time frames is kind of more important than what we've seen in terms of older key rejections from back here. So this is really what I'm monitoring and balancing out with today's narrative. It's very neutral across the board. It's a dissonant narrative overall. The more immediate picture is to the upside. And then if we actually do clear out those neutral references, the upside is a lot more clear as we continue to move up. And this is just a this is not a NADRO reference. It's just the previous highs that we've seen in the current, higher time frame swings. It's just a quick visual reference to get an idea of where those highs were. So we have been consistently coming up to test them and not being able to get through them, which is a pattern that we're monitoring as well within the context of our narrative. All right. So that's the overall DMI for today. Very neutral across the board. You could play the acceptance picture on all of these neutral references essentially and be looking at them as just short-term targets and then initiating new positions from area to area. You could play it that way, which is a very good, I guess you could say strategy for today. Another way you could do it is just kind of following along with this line in the sand and, monitoring any type of moves to the upside or to the downside. But ultimately, the ES is just not in a very clear location for today. So be cautious, mind your risk and trade your process well. And I hope you have a good trading day out there.